Spence, do you know who this is?
No, who is this is?
In my experience, the ascending triangles are some of the most reliable patterns out there today. While I employ several patterns in my trading arsenal, it has been my experience that these have the highest success rate in general. So in this lesson, we're going to focus on, obviously, ascending triangles. First, this is a bullish continuation pattern. Second, these are bullish patterns composed of two parts. First, we have the flat upper resistance line, where resistance has formed and where the bears or sellers are positioned. Next, we have an upward trend line that signifies support, and that, of course, is where the bulls are. We have the bears hanging out, preventing the price from increasing. Typically, it's been touched twice or more, although the amount of times can vary on your own trading style. And here's where the bulls congregate. They are increasingly pushing the price upward, therefore creating this upwards trend line. Confirmation of a breakout is a solid close above this trend line. Now, I mean a solid close with authority, not something marginal, but instead a significant close above the upper resistance line. The closer the closing price comes to the apex of the triangle, the less reliable the pattern becomes. But it can still work, yet you must rely on other indicators beyond the simple pattern. Personally, I like to look to the moving averages, RSI, MACD, etc. These you'll all learn in other lessons of this video. The further to the left of the apex the breakout occurs, the more reliable and bullish the pattern becomes. This is a key point that you must remember. The second most important characteristic that one must memorize prior to utilizing this pattern is volume. Volume during the formation of the pattern should remain light or sparse. However, as the breakout occurs, the volume must be explosive and powerful. Interestingly, on the descending triangle, everything I said to this point is simply the reverse. It is nearly impossible for me to stress the importance of psychology. Every pattern, every moving average, everything that has to do with technical analysis is based around psychology. So let's review the psychology of the ascending triangle pattern. Basically, what we have is supply at the upper end, which is our resistance line. As demand dwindles, the price increases, hence the upward moving trend line. On our supply side, the bears are selling at the area of resistance, but eventually their inventory of shares will run out and the forces of demand will exhaust the supply, forcing the explosion with heavy volume. This is a highly utilized pattern, therefore, an aspect of the self-fulfilling prophecy comes into play, since thousands of traders and computer-operated systems are watching this pattern develop. Now let's take the rest of this video to look at some solid examples of the ascending triangle in action and learn how to profit from this profitable pattern. Okay, the first chart we're going to look at is SDS, and the period that we're looking back at is November 2007 to approximately January of 2008. Anyhow, let's begin by drawing in our plot points. So the first thing that we have right here are our 2 points that represent our resistance area, right here and here. Now we combine our 2 plot points to begin the uptrend line that forms the hypotenuse of the ascending triangle, as you can see right here. Now let's move on to the second most important factor, and the reason I chose this area of the chart for the breakout was because of, you can see right here about December probably 14th, that we had a major decline in volume. So volume was extremely light. However, it started to pick up as the bulls started to push this up to the resistance area. And then we certainly have a nice close over the top of our ascending triangle resistant line. At $53 was our open. We closed at about $54.50. Next 2 days we had a nice little open, kind of came down a bit, but our support area was never in jeopardy. Then we had our nice push up to about $56.75 for a nice gain of probably about 5% in 2 days. At the risk of sounding redundant, I need to repeat several of these key factors on this chart. It's very important that you learn these and master these, because you'll quickly be able to develop what I call chart vision, and it easily and quickly happens As you can see, I picked out this triangle on this chart fairly quickly without even having to draw it in. So this is something you'll do as your chart vision develops. But just remember, you need 2 plot points on the uptrend line and 2 to 3 plot points on the flat resistance line on the top. And don't forget, we want light volume that's increasing as the impending breakout occurs. Once the breakout occurs, we want this explosive action as we got in this chart. You can see right here where we had way above normal volume. Let's move on to our next example. Okay, in this example, we're going to look at NLY, again, trading on the New York Stock Exchange. Let's begin by drawing in our resistance line and our trend line. Notice the value per share of this company is significantly lower than what we have examined in the past, but moves from these types of stocks can be explosive. On a side note, never monitor price per share when looking for gains. Pay attention to percentages only. You have a fixed amount of capital to work with, so it really does not matter what the price per share of a stock is, but rather, it is the percentage moves that we are looking for. Again, here we have the bulls and bears at a battle. As you can see, and the reason I included this chart, we had a few breakouts, but they were insignificant. Further, examine the volume in conjunction with these pseudo breakouts. It just wasn't there, so you just continue to monitor. This is why you want to be careful and not too quick to jump into these. All the elements must be in place before you actually make a move. Okay, so here we have a gap up in price above the trend line, but the volume is low. So what do? You continue to monitor. Then we have a small spinning top candle with the volume picking up at support level. This is a sign that I would be watching this much closer for an entry, but I will wait for further confirmation. Notice how these lows are making higher lows with very nice consolidation. Okay, December 30th. This would be an entry point. Although the volume did not confirm, the consistent hold of support would have bolstered my decision. As you can see, from an entry at 1750, you would have cleared a high of 2050 for an 18% gain in 2 weeks. Okay, here we have MO, again, trading on the New York Stock Exchange. So let's draw our pattern in again. We need our upper resistant line, and then we need our lower but upward moving trend line. Here we have a much longer term pattern, which I prefer since the trend line is more stable. As you can see here on the 19th, we had an open above the resistant line, then it closed right on that line. But this is not a clear breakout indicator. Now here, we have a breakout, but I'm not convinced because of the previous 3-day candle formations, and the volume was not anything spectacular. Here we have a nice gap up, and then it makes its run. Dependent on your stop loss and trading style, you would have been able to weather this storm or consolidation period and caught a really big run. But either way, you still would have made a nice profit. That's the beauty of the ascending triangle pattern. If you're only looking for 5%, you're pretty much going to nail it every time. Okay, in this example, we're going to look at QID. Basically, let's just do what we've been doing and let's draw in our pattern. We need our upper resistant line and our lower but upward moving trend line. Here we have our typical bulls and bears fighting it out within the scope of this pattern. Here we have our breakout in conjunction with our explosive volume, and the gap up further bolsters the probability of it being a successful trade. Therefore, our entry is set. Watch the 10-day moving average and watch it go. So after 11 trading days, we made 30% profit from 42 to 55 bucks.